Alright guys, good afternoon, good morning, wherever you may be, good evening. I hope you're all well. I'm just going to check that all this is working in terms of sound and visuals. So just bear with me just a second. It looks like the audio is working and the video is working too. So yeah, like I said, I hope you guys are well. We expect a little bit of volatility today in the markets. So I'll crack straight on and explain why. So today we've got a pre-calculus of the non-farm employment change by the ADP, but we've also got Jay Powell speaking at around about 6:30 p.m. here in the UK, 6:30 UTC. And he's going to be talking about inflation, the hikes and everything else. So this should be an event that will perhaps cause some volatility, as it always does. So that's at 6:30 p.m. today. And then tomorrow we've also got the core PCE price index. Now the PCE is a main measure of inflation. It's different from the CPI in the sense where the CPI doesn't just calculate the consumer price. But let me just read the definition. Okay, so it differs from the core CPI that it only measures goods and services targeted towards and consumed by individuals, so not just businesses. So this is an important one, and it is the Federal Reserve main indicator for inflation, right? So that's tomorrow at 1:30 p.m. UTC. And then on Friday, of course, we've got the non-farm employment change and unemployment rates and the average hourly earnings. So all of this, if the jobs come in hot, it could mean that we need to sort of like dump a little bit or whatever. So, but all of this is basically volatility, and then we've got volatility coming towards the end of this week. So I've got a little bit of time. I thought I'd do a quick TA update. Now this might not be as relevant for crypto anymore, and I'll show you why in just a second. But before we get onto the charts, I just wanted to explain that the great majority of the markets, especially is seen on the S&P, is already hedged for a hawkish, meaning a bearish or aggressive stance from Jay Powell. Okay, so if it's already hedged for the downside, then I would be careful being short here, because if they're all hedged, all it means is that if for example, they say that they're going to pause the hikes, not necessarily a pivot, but if they don't hike the rates, the interest rates at 75 basis points, for instance, if they decide to go with 50, that means that there'll be quite a lot of unwinding of those short positions, of those hedges, if you like. And that means that the price goes up. If that will affect Bitcoin or not, it's a different story, and I will show you that in just a second, and we'll have a look at the correlation chart. But I just wanted to highlight that. Another thing that I noticed here as we're getting close to the end of the year is the options market. Now, I've showed you this before, and we haven't looked at this for quite some time. But basically, this is the end of year contract, and you can see that the notional value of this is $2.1 billion, right? Which is a massive thing. I mean, usually in the bull market, you'd see this on the quarterly. But in terms of notional value, but here we are, we've got $2.1 billion of notional value for this contract. The great majority of it for the 30th of December here, the great majority of it is on calls, as you can see, and the calls are sitting at round about 30k, right? So the great majority of them here in the light blue that you can see are around about 30k. Now, of course, the majority of the puts at around about 15k, but we've gone away from 15k now, right? So 10k and 15k was the predominant value for the puts. Interestingly, max pain price says here at 20k. If you don't know what max pain price, this just means that it's the price at which all the options will expire worthless, and this is why it's called max pain price. Now, you know, I remember a time when, especially in the bull market, where this max pain price was almost like a magnet, where the price of Bitcoin was very much attracted to the max pain price. And a lot of the time, close to the expiry, we would see price getting very, very close to the max pain price, and then all the options would expire worthless. Of course, there's a lot more moving mechanics into this. The options is a complex mechanism. It's a complex financial instrument. Basically, most people that are trading in options are doing so to hedge their directional positions, and of course they will be selling options and puts before it actually gets to the max pain price. But nevertheless, the price of Bitcoin was always attracted to the max pain price, and I'm not sure if this is going to be relevant or not, if price is going to shoot now to 20k but before the end of the year, but it's possible, right? So that's why I just thought I'd highlight this. In terms of open interest, the open interest has been growing, even though there was a severe drop here from November, but it has been growing in the last sort of like few weeks. And in terms of historical volatility, as you can see, the volatility has dropped significantly for the month. And that's the highest measure I can get to is from the month, right? So the volatility was way up here November 23rd, and then it just died down where price has just been going sideways. So anyway, I just wanted to show you that, especially with the max pain price at 20k for the end of the year. I'm not sure if it's relevant or not, but it's probably worth keeping an eye on. As for the stock heat map, you can see it's a bit of a mixed bag, but the great majority of it is in the red. In the finance sector, there's quite a few in the green here, but like I said, the great majority of it is in the red. For the crypto heat map, the great majority of it is in the green. We've had a little bounce, so there's a discrepancy here, right? Where you see that in the stock market, you're seeing a lot of it in the red. Like I said, positions are hedging for a potential hawkish outcome on the Federal Reserve regarding the interest rates. And yet Bitcoin and Ethereum is up 4%, Bitcoin is up 2.8%, and everything seems to be having a relief bounce. So let's just have a look at how relevant this is relating to the S&P and the traditional markets. Now, this is a correlation chart. Again, like I said, I've said this 1,000 times before, the blue line is the S&P, the orange line is Bitcoin, of course. As you can see that this is a 4-hour chart, and you can see that it had been very closely correlated for quite some time. And then round about the beginning of November, everything kind of changed, right? So you can see, for example, here that the S&P continued to go up with higher highs and higher lows, and Bitcoin had a massive dump. Now, of course, this was, in terms of it was not technical, it was due to fundamentals, due to the FTX debacle. Of course, the FTX was insolvent, and that caused a lot of panic and a lot of fear, and the markets went straight down, vertical down as a result of that. Okay, now Bitcoin has just been going sideways, even though the traditional markets have also been going sideways here, and you can start to see that there's a little bit of correlation here where we've got a little bit of a little hump there, right? So let me just pull this a little bit closer. You can see that the correlation is a little bit close here, although Bitcoin dumped, the S&P didn't, right? So Bitcoin is a little bit more volatile, especially to the downside. And then, of course, the S&P pumped a little bit, and so did Bitcoin, right? And we did a little hump here, right? So a retest, if you like, of previous area consolidation, and we see exactly the same here on the S&P. Now, Bitcoin is going up, but the S&P is stationary. This is probably because, like I said, a lot of the people in the traditional finance are expecting a little bit more of a not bullish, but a little bit more of a dovish tone coming out of the Federal Reserve. What I mean by that is that perhaps they're going to slow down the pace of the interest rates hikes. Okay, so maybe not 75 basis points or 100 basis points like we were talking about in the future. Maybe it's just going to be 50, right? I remember when we first talked about 50 basis points way back in the beginning of the summer, that the market tanked as a result of that, because 50 basis points was quite a lot at the time. Now it seems like the markets are not really pricing that in and actually see that as a positive. Of course, it's all relative compared to 75 basis points that we had in the previous month and the previous quarter. This is not 50 basis points is definitely a slowdown in those interest rates hikes, right? It's not a pivot. It's not necessarily a complete stop, but it's definitely getting close to a pause. And like I said, as a result, the great majority of the people are long, because as you can imagine, this is higher highs and higher lows all the way for the S&P. But now we're starting to see a little bit of a pause here, and I'll explain this on the chart a little bit better. And like I said, people are hedging, right? So they're hedged to the downside just in case, you know, the Federal Reserve doesn't come out with 50 basis points and everything gets a little bit bearish. So that's why we're seeing a little bit more shorts increasing and a little bit more of unwillingness to buy at these levels, right? Combine that with people taking profit, etc., traders taking profit, etc. So, but the thing that I wanted to point out is that, yes, there was a decorrelation here where the price of Bitcoin went down and the S&P went up. But in terms of relevance, I don't know if that's very relevant, because actually what you can see here is that we're starting to see that correlation realign again, right? So again, with that hump there, you can see the hump here. And we're starting to see the price sort of realign again, even though there was a little pump here to the upside on Bitcoin and not so much on the S&P. So today and the rest of this week, obviously, because there's volatility coming in traditional markets, will definitely be a good time to observe this chart and to just check if this correlation is still valid or not. This will definitely be a test, and if Bitcoin just continues to go up and this goes down, then you know that it's decorrelated and no longer relevant, and we don't have to track the S&P anymore. On the same hand, if the S&P goes up and Bitcoin doesn't, then it's the same result, right? It's decorrelated and it doesn't bear any weight paying attention to the S&P anymore, right? So anyway, enough of that. Let's just move on to the charts, and I'll start with the S&P because, like I said, we're still a little bit correlated. So I start here with the weekly chart, and you can see that basically, make this a little bit bigger, we basically broken through this resistance here, right, which was the year of 2021 value area low here, which was previous resistance here. We broke through that. We've broken above the developing year value area low, which is what this blue squiggly line that you see here, which is 2022 squiggly line. It's the value area low, and we broke above that. And not only did we break above that, we've come back and we've tested it, and it's confirmed it as support. Okay, so this is acceptance. All right, so we're still accepted there. However, we've got a very large low volume node right above us, around about 4,100 points, and that is going to be resistance until proven otherwise. Okay, so that's just you know, that's just guaranteed that this is resistance. Okay, if however we break above 4,100 points, then of course it's going to be a vicious bear rally, and we could be going all the way up to 4,300 points. But I don't want to pay attention to that because that's too far ahead. For now, we are very close to resistance, 4,060, 4,100 points here. And even if we do see a little bit of a less bearish Federal Reserve, we might just pump all the way to 4,100 points, and that's basically what it is. And I'm not sure if there is a good place to short or not. I'm not sure how much strength there will be there. Obviously, I haven't got a crystal ball, but you know that 4,100 points is resistance, and we're very close to it. Okay, so that's what I'm seeing here on the S&P on the higher time frames. If we look at it on the lower time frames, like I said, we're close to resistance. If we look at it, for example, on the quarterly VWAP here on the daily chart, you can see that those highs, higher highs and higher lows have broken above the weekly VWAP. We broke above the previous week value area low, and we're very close to the value area high of the previous week as well. Okay, and where's that sitting? 4,100 points. So yet again, more correlation to that 4,100 points. It adds on the quarterly VWAP, and it also adds here with the low volume node on the yearly. Okay, so here on the monthly it gets a little bit more confusing. You can see this, when I say the monthly, I mean this monthly VWAP, right? This is still an 8-hour chart. But you can see that 4,100 points is basically around about here, right? And I wouldn't be surprised that if we do have some volatility and it comes out that it's not quite as bearish as everybody is hedging for, that we could see a little pump all the way to 4,100 points, and then we'll have to see what happens there, right? So that's basically what I'm seeing on the S&P. Of course, if we go down, we're supported by the monthly VWAP. Sorry about that. We're supported by the monthly VWAP here. And I lost track of that with a phone call. I do apologize. And then we are in the weekly VWAP situation here. just turn my phone off a second. We've got the weekly VWAP and the previous week VWAP right above us at around about 3,986 points. Okay, so you know, this is resistance until proven otherwise. Okay, but it is interesting that we are above the monthly VWAP and we're also above the quarterly VWAP. So in terms of like long-term scenarios, this is bullish, right? On the shorter term, we might be facing resistance here, but in terms of like on the higher time frames, if you like, you look at this and we've still got the monthly VWAP and the previous month value area high, which just so happens to be the developing month value area low here, right, to act as support, right, at 3,800 and the monthly VWAP at 3,900. So, you know, on the higher time frames, it does look bullish for the S&P. On the shorter time frames, then it's starting to look like it needs a little bit of a retrace. But yeah, so I think that we could see potentially a run up to 4,100 points here. And I do think that this is going to be strong resistance, very strong resistance. Okay, so we're very close to resistance. I wouldn't be entering any longs right now, not on Bitcoin and not on the S&P. The time to enter longs was around about here, 3,600 points. So that's all I've got here for the S&P right now. So I've given you some levels of support here at 3,800, 3,900 as well. In terms of support, if we do go down, and in terms of resistance, I'd say 4,000 points and 4,100 points. As far as Bitcoin goes, let's have a look from a top-down approach in terms of narrative. If we've got, we start here with the, let's start here with the weekly chart, right? Weekly chart on Bitcoin, you can see that we're basically very, very close to that value area low of the developing year of 2022, right? That's sitting at around about $17,500. Okay, on the same hand, if we look at the quarterly, this little pump that we've had today brings us just inside the value area low of the current quarter, okay, of the developing quarter, right? So the developing value area low of the current quarter is sitting at around about 16,700. All right, above us, we've got this great big void in terms of volume. There's nothing there, which means that the price can travel very quickly, just like it did here, all the way up to the quarterly VWAP, which is sitting at around about 18,500. Okay, this is not acceptance. For it to be acceptance, I'd like to see something more like something like this, and seeing the price actually like coming down and holding this level here as in terms of support in order to have a chance for it to go up. But we're not seeing that just yet. We're kind of just hovering above there. Okay, so it's a little bit too early to say, but we can go and nail down on the lower time frames and just see. In terms of long positions, I wouldn't be wanting to take a long here. We're very close to resistance at around about 17k, and we're also just testing the value area low of this developing quarterly, right? So it's not looking very it's looking very close to resistance, put it that way. However, if we nail down to the 4-hour chart and we go here on the monthly VWAP, you can see that we've already kind of gotten back above the developing value area low. We had a nice little sideways action here in time and space between the retest, right? So this to me looks like acceptance. We've been accepted inside this monthly value, right? So if you imagine this as a market profile chart, right, with the value area high and the value area low, this means that we've actually gained acceptance inside of it, and now we're very likely to go up to the monthly VWAP here at 17,500. Okay, so which is, if you'd like, the point of control. Now I'm just going to delete all these brush marks because I want to show that level in terms of context. Now 17,500, if I just grab a trend line here, right, so around about this area is printed it on all the charts here, right? So this 17,600 level is a level that I want you to pay attention to. So on the bottom right hand corner, you can see that that's around the monthly VWAP. If I go over here to the left, you see that this is the previous week VWAP as well, right? 17,600. So this is an area of confluence. You can see that we've been consolidating sideways like this, and we've got this level here for resistance. So if we do see a jump to the upside, I think that this is going to be strong resistance here at 17,600. Only because in terms of narrative, we've got confluent levels here with the monthly VWAP and the previous week VWAP. Okay, so even though we are accepted inside the developing month VWAP, it's very likely that we find resistance here at 17,600. Will I be entering a long position, or would I enter a long position here now? No. The right time to enter a long position would have been down here. If you watched my last technical analysis update, I did say that at these lows you should be entering a long, and of course that was the right play. So right now here we are at resistance. We have room to go further up, but at these highs here, this is a diddle in the middle, and I wouldn't be wanting to take any trades. And at these highs here, I wouldn't be entering any longs either. In fact, here I would be looking for shorts. Okay. Of course, if we reclaim this level and have a little bit of time and space here, then I think we've got a very good chance to going up to 19k. But you know, that remains to be seen. I don't know if you know, we trade level to level. There's no point of trying to figure out if we are actually going to go throughout the whole of this developing monthly value. Okay, when the point of control, or the monthly VWAP, is right here in the middle, in confluence with the previous week VWAP. Okay, it is possible, but we have to be very, very careful. Okay, so note as well that the developing monthly value is also very close to the previous week, or the week before that, value area. Okay, so 19k for the value area high, 17.6 for where the VWAP is, and the 16k, let's say 16k for the value area low. Okay, so that's basically what I'm saying right now here, is that this is a no trade zone. If it gets to 17,600 with the volatility that we've got incoming, I would be looking for shorts, of course. But there is a possibility that we can get very, very bullish, and if we reclaim that level from above, retest it, that's a long signal, and we're very likely to go up to 18,900, 19k, something like that. Okay, if you look at that 18,900, like I said on the last technical analysis update, if we look at that level there, in fact, it's probably easier to see it on this one. Right. And put this on a 12-hour like this. You can see that basically we've got this previous area of support is basically the low here, right? So we've got 18,600, 18,800, which is basically where the quarterly VWAP is, right? And that's going to be strong resistance. We've got quarterly VWAP. This is the previous area of support that has not been tested as resistance. So naturally, if the price does go all the way up here, then that's going to be the mother of all shorts, in my personal opinion. Okay, at least it's more favorable to have a short at that position than it is to go long. Of course, if we reclaim that, then that means we've got acceptance back inside of this high volume cluster, and of course I wouldn't be looking for any shorts up here. I would be looking for longs targeting the other side of balance at 21,600. But it's very easy to start looking at all those levels and thinking that, oh yeah, if we go here then we could go there, and if it goes there it can go there. It's, you know, we trade level to level. There's no point of thinking about all of those things. The interesting thing here is that there's hardly any volume there, so the price could travel very quickly to about 18k, 18,500. But in the meantime, we've still got resistance above here at 17,600 with the monthly VWAP and that previous week VWAP as well. Okay, so that's something to keep in mind. And that's pretty much it for in terms of Bitcoin. So if we do get accepted back inside of this range, of course, that we could be permanently, we can do it like this, I suppose. Right, so getting accepted back into this range, if we look at it like this, we're clearly at resistance here, right? If I take the VWAP off for a second, you can see where we are. We're clearly at resistance here, right? So even if the price does something like this, If it gets accepted back into this range, then it's very likely that we go at least to this point of control here at 16,500 and potentially even lower to around about 15,900, 16K. All right, meaning that we're still trapped inside of this range, this eternal range. But you know, that remains to be seen. Of course, getting above here, getting to that $17,600 level, which is where the monthly VWAP is, right? There's still a possibility that we come all the way back down here again, right? It's time and space here, and then we'll have to watch this level here for longs, all right? Because this is a previous value, and you know, I wouldn't be surprised to take that this hacks its support and then the price goes up. So we'll just have to wait and see, right? What we don't want to see is the price do something like this, with this being the line here, and then a strong rejection back inside of the range, right? If it's back inside of the range, then you should be looking for shorts here, targeting, like I said, that point of control and this level down here. So that's pretty much it in terms of the candlestick charts. If I look at EXO charts quickly, let me just try and make this bigger. On the higher time frames, you can look at the monthly. The monthly looks terrible, as you can see here. Big red candle to the downside. Yes, we're going up again, but we've not tested that 18K level, which is previous level of support. So that's on the monthly. The monthly doesn't look too good. On the weekly, we've taken this naked point of control below it, and it does look like we want to go up. There's not really many anomalies here on the volume profile. All the way up to 24K, right? So we'll have to wait and see how that pans out. So, but on the weekly, it's starting to look a little bit better, and on the daily, not so much. I mean, we've got a daily naked point of control here at 17,300. So we're looking at that 17,600 level where the monthly VWAP is. There's also a naked point of control there. So I wouldn't be surprised for the price to tag that and to actually test that. That's on the higher time frames. If we look at the lower time frames here, let's start with the monthly. Okay, in terms of volume and in terms of market profile, if I merge these two because there's overlapping value, right? The value area low of these two, so the composite of these 2 months, the value area low of that composite is sitting at around about 18,800, which is that level of resistance that I was talking about. But we've also got a naked value area here around about 17,800, 17,600. So you can see this is not a naked one here, but this one is. But you can see that 17,600 is going to be resistance. And then, of course, if we do get above that, we've got plenty of resistance with single prints, and also this value area low of the two, a composite value area low of these 2 previous months here, sitting at around about 18,800, right? So confirming basically what I showed you on the candlestick chart. If we look at the weekly, it's very much the same scenario. We've got overlapping value here, so I can just merge these profiles. And you can see that we deviated below the value area low here. We're on our way to the value area high, where it starts sitting 17,500, which is again very close to where the monthly VWAP is, around about 17,600. So this is without a doubt going to be resistance. Okay, if we do break above that very thin volume, then I wouldn't be surprised to see the price go all the way to 18,800, 19K, something like that. Okay, but again, here you can see that the volume increases significantly, in fact from about 18,600, and so this is going to be resistance until proven otherwise. All right, so that's on the monthly market profile. And on the weekly, if we look at the daily market profile, we've left some single prints behind here, right? There's no poor lows below us, which is great. So we've taken all of these poor highs. At the moment, we've got that naked point of control here at 17,300. This is a volume naked point of control. And we've also got some trapped longs here. So let me just grab the, let's see if I can do it like this. Right, so you can see that we've got some trapped longs there, and that is sitting at around about 17,500, 17,600. Okay, so you can see that the price can very quickly go up to here, But then with these guys trapped, I wouldn't be surprised for them to want to get out at break even, especially since they've been waiting for so long, right? So if they haven't been liquidated, the ones that haven't been liquidated will want to get out at break even. So that's going to cause resistance, as well as the monthly VWAP that's sitting there, right? So again, I just want to make this very clear. I wanted to show you that it works on the market profile or on the candlestick chart. So it doesn't matter if you don't have Excel charts. I just wanted to point that out. And I wanted to show you that we've got strong resistance at 17,600 and then again at 18,800. Okay. In terms of support, right, we've got this 16,600, right, as a potential level of support. And like I showed you on the candlestick charts, if we get accepted below that, then I think we're going to go all the way back down to 16K and potentially even lower, right? So we'll just have to wait and see how that pans out. Here I can do some composites as well. So let me just, don't know why this isn't working. Right, here we go. So I can merge, this is a 5-day composite value here, and this is a 2-day composite value. Right, so even if the price was to retrace this and fill out these single prints, okay, we've got a few trapped shorts here. You can see high negative delta there, so high selling volume there and high selling volume here. So these guys will want to get out because they would have been caught out today with this impulse to the upside. So if the market decides to tank a little bit lower, right, I wouldn't be surprised if the market decides to do something like this. I wouldn't be surprised to see these guys want to get out of break even, and if they want to get out of break even, they have to buy, and of course that's going to add pressure to the upside. Okay, so there's a little bit of support here around about 16,500, and again, if we do break below that 16,500, 16,600, then it's very likely, if we break through that, it's very likely that we go and test lower. Okay, so that's basically what I've got here in terms of on the market profile. I wanted to show you this again. 16,600 again is where that point of control is here on the candlestick chart, right? So even if, let's say that the market does this, goes all the way up there, and then it gets accepted below here. If you take a short here, because we got accepted back inside of the range, don't forget to take profit here at 16,500, because like I said, there's a few trap shorts there. That's also the point of control, and this could very easily rally all the way back up to that value area high. Okay, so there's a few trades to be had there. I mean, it could also just tank straight down, but if I was in a short from up here, I'd definitely be taking profit here, right? Targeting here, but of course I'll take the majority of the profit here, and then of course if it starts going back up again, I would add those profits back here for another short and targeting again that point of control and perhaps lower. All right, so we'll just have to wait and see. I mean, this is not financial advice. I'm not a financial advisor. I'm just saying what I would do if I was trading this. Okay, so you've got some levels of resistance, 17,500. We've got 18,000, 19,000, sorry, 18,800, 19,000 here on this 4-hour chart. You can see it's the previous month value area low, right? It's also the current month, the developing month value area high. Okay, so 19,000, and I showed you as well that it's very, very strong resistance because it's also the edge of a high volume cluster here, right? As you can see here, right? So if we do break above 17,600, that's the next level to go short at. Okay, and I'd be paying attention for shorts. That's the mother of all shorts there. Okay, but if we cannot get above 17,600, then you can trade this all the way back down to the value area high around about 17K, and then you'll have to watch and see what happens here. Okay, will the price bounce here, or will it accept inside and then hopefully get a retest there like that where we enter a short? Right, so that's the real question. In the meantime, like I said, keep an eye on the charts for this volatility incoming for the rest of the week. As the price has been moving so slowly, I doubt very much that we see massive moves up to 19K, but at least now if it does go to 19K, you know exactly what to do. In terms of support, like I said, I've already given you these levels at 16,500 and 16,000 as well. Okay, on the higher time frames, I just wanted to show you this as well, that I did highlight. I think it might have been on a different chart. Could it be on a different chart? No, it was on this chart. So on the higher time frames, we've got some yearly closes and opens here, and you can see that we've got here at 14k or 13,800, we've got a yearly level there that could potentially act as support. Okay, at the moment it looks like we're bouncing on the value area high of 2020, which is basically, this is the 2020 VWAP, this is the value area high, this is the value area low, and at the moment it looks like we got rejected there. Okay, so it doesn't want to accept inside of this level, so potentially we're going to be here sideways for quite some time, but we'll have to wait and see. At least you know what to do on the higher time frames and on the lower time frames as well. So I hope this was useful to you guys, and I don't want to take too long. I want to see who that call was, but I hope this is useful to you, and I will try and do another TA update before the end of the year, but life is busy at the moment, working full time. So I hope this was useful. I hope it sort of like puts things in perspective from a higher time frame, and also helps you with your TA and your levels that you're watching and the levels that I'm watching, that somehow it all kind of marries up and it makes sense. So I hope you guys have a good continuation of good rest of the week, and yeah, trade smart and just make sure you use stop losses, okay, because this volatility coming today could be quite significant and you don't want to be caught with your pants down. Okay, so trade smart, and I'll speak to you guys soon. Take care. Bye bye.